Hey, what's up everyone? Day Trader Rockstar here, and it's another video I'm putting out. I just put out an educational video based on a pattern setup that I love to trade. It's called a coil stochastic setup. And again, this video is going out to you just to kind of give you an update of some of our trading. Just to review the trading of the week. The trade, the setups, the discipline, everything coming together. Even the room really contributing to the trade, bringing some good setups in the room. And we just analyze and we wait for the high probability setups and we take them. And it's just great to review these because the education that comes along with the review is probably just as worth as much as the trade was. And that's a lot, when I say that. I'm not, downplaying the trade at all. These trades, when you look at something like this, I like to call it chart porn. It's a beautiful pattern. It looks so good on a piece of paper. It's something that you want to actually put up on your wall. This is a good example of that. Macy's, one of the first trades of the week. Macy's was that coil stochastic setup, the downward channel. It was textbook. It was a high probability setup. We took it, and it just took off. It ran. It was perfect. It was like, that is what we look for. So I get excited sometimes talking about these setups, and because when you see it, you get excited. We just got out of a couple more today that we're setting up like this. The CSX. And again, these are brought to the room by some of the members here, and I jumped right on it. And look at the results from that. Even with the market, even though the market was up today, but the last couple of days here have been choppy, very choppy. Doesn't matter. These patterns play out. These are high probability patterns. You need to stick with these. Stick with them. Stick with them. Stick with them. Don't. Again, it's just a thing we have to always remember. Stick with what gets you the higher probability money. Really. All right, let's kind of go over a couple things. The CSX was the other one. Again, another coil stochastic setup. Lots of times in the market, you'll be going into the market and you'll see the market, get into a rhythm, but you'll also see certain stocks start to get into that pattern formation. And so you start to see a lot of, sometimes you see falling wedges in the market. Sometimes you see inverted head and shoulders in the market. Sometimes you see, opposite, head and shoulder patterns, and a lot of things. It's usually a good indication of what the market's looking like. But this is great because the market's moving up, and once you get that counter trend little rally or something pulling back a little bit opposite, you can really identify it, and you know that the strength of the market is going to break this to the upside, and it's just about timing. So it's about finding these. So yes, a great trade today. And just to clarify, even though we know how to spot great things, the important part, the other part of the formula is taking the profits off the table. Where do you take profits off the table? Well, there's so many different answers. There's right answers or wrong answers. So one thing that you could always say is, well, I take it off and then the stock ends up going up here, and you can't never guess that. That's a hard thing. But what you can do is read the chart, and when the chart tells you, hey, we have a higher probability of a pullback because of our momentum indicator lining up like that, there's a good shot that we're going to run into a little problem here. So it just makes sense to take the emotion out of the trade. And again, I harp on this so much that you're just probably turning off this. Oh, here he goes again, taking the profits into that signal. So important, just to keep you disciplined in this market. That's if that's the only thing you're really doing is keeping yourself as almost like a trading bot. You're a computer. You know your entry, your exit. And if it's it's a high probability setup, then the probability is you're going to get more good trades than bad trades out of them. And one thing leads to the next thing, and you're successful. All right, let's just take a look here. So again, that was it. The EXR, of course. This was a breakdown, but then we had an oversold stochastic pop back up. It just was a pop and a drop, and this actually still looks good. So actually, a little update for going into tomorrow. This actually continues to look very good. We're trying to get a push up here. It's very close to recent highs. It's a REIT. It actually looks really good. The COF, downward channel. This was a good case of the divergence, positive stochastic divergence, where the stochastics are pulling back. The price level is actually going opposite it. That's a very big bullish sign. There's different ways to read stochastic divergences in the market, but lots of times I like to just measure the price action with the stochastics. But in this case, this is really what we call the pure divergence, where the stochastics are acting different than the price, or the price acting different than the stochastics. Either way, it really represented many other patterns. You know, the stochastic rotation buy levels. We took that trade. You know, pushing a high. This still continues to look really good. I do expect this one to break out the 52-week highs probably tomorrow or the next day. So look for this trade to be taken in the market. And then just if you do get this tonight, don't forget tomorrow we have the job numbers out, and that's at 8:30. So that's going to put the, you know, that's going to be interesting to see if we actually get a spike in the market and a sell-off, which is my worst, you know, type of scenario playing out, because it's just a big aggravating, big push up and then a drag back down, and it's not that hard pullback and a volatile swings. It's just that slow drip, and it's so hard to just sometimes, you know, you're trying to time it, you're trying to look for that bounce, or you know, you don't have you know, you have great news, so it's really hard to trade the counter trend to that. So you know, that's the worst case scenario if we get some good numbers and we really get that pop up and drip back down. Other than that, you know, business as usual, I think. Taking a look at some of the other trades, I ended up taking PepsiCo off. As you can see, it's just going sideways here. We did have a little bounce up here, then it pulled back, and it wasn't doing much. It's actually, you know, it hasn't moved out, so eventually it'll set up on something more recognizable, and we'll be able to actually trade that again soon. But it didn't really do much. The WXS, I'm just going right down the line here. Again, this was a trade off of the pullback on the stochastics on the daily. The first pullback back to the 20, it popped. We took profits in it. It's still looking good. It's still, you know, this is just your classic uptrend, your pullback, your oversold stochastic, your follow through, move up here. So it's just another good timing area. Of course, the PSA. And you can see this was based off the 1, 2, 3 pattern, and again another high probability setup off of the trading playbook. Basically, you have the recognizable pattern, but you have the multiple indicators, meaning the moving average coming also underneath. This whole area becomes a high probability zone because the timing of the stochastics, the downward channel line, the trend line underneath, but the recognizable pattern too, meaning that we do recognize that there's equal distance between the two trend lines. You know, it gives us a lot of room to work with and stuff, and we know that we have some upside. And either way, we got a nice bounce off of that and a nice little pop. And that's what we're looking for. Again, we're not looking to really, you know, follow this all the way back up to here. That would take maybe a month or so, maybe a couple weeks, maybe even a week if the market really decided that that's what it would do. But normally that stochastic area here takes about 10 days. And, you know, I don't see us staying into any stock, you know, try not to stay into any really tradable, momentum tradable stock that we're taking on these signals more than 3 or 4 days. There's also, you know, you do have buy and hold stocks that you could hold, waiting for the event to play out or something to play out. But these setups here, we're getting in the timing is always great on this. You know, we want to, maybe it's 1 to 3 days between where we want to really see that big aggressive move. Now, of course, you could trade intraday patterns on this, but these are all recommended, you know, short-term swing trades, getting a little position, getting the biggest pop, and, you know, but having a high probability of a trade like that. And again, the 60-minute chart, you know, we just do a lot of trading off of these charts and stuff. Let's see what else we got in PSA. CSX, we did the CSX. I did that on the recent video. I think I just covered that before too, right? Yeah, downward channel, the coil stochastics. Great setup. I put on a bounty on the coil stochastic setup. Bring me a beautiful coil stochastics and I'll give you something in return. You know, I'll give you some swag. I'll give you a spin of the wheel. Maybe. Don't lock me in on that. Let me see how with these spinning of the wheels, you know, giving away my whole life here. All right, Chesapeake Energy, CHKP. It's interesting. It's not interested. We got a little profit on that though. That was a good trade. You know, it was a good trade. The reason I got into it, I think, was just the pullback, and we just got a little bounce up. And you know, remember we talk about that 60-minute chart, and you know, we're pushing up against this area of resistance again. This is an inverted head and shoulders. We have a neckline. We're getting to a little area of resistance. This becomes a major level right here. You get a pop, you're definitely going to get a pop, but a good shot that you're actually going to get that retracement back down here. So something to watch tomorrow. Again, the APD, we talked about that one yet? APD. Again, here's another coil stochastic setup. Again, that was a trade we took. I took off today. And again, a coil stochastic downward channel, big pop. Actually pulled back, rotated back down, and then got another buy trigger, and then pushed back up, and overbought stochastics, take profits, boom, move on. Next setup. So next setup, then we had, of course, the Cummins engine. CMI, that was a little bit different. You see how I jumped in on Cummins very early today. Someone brought it to my attention. What I see here is almost a double. There's almost a little double bottom here. We're almost getting a secondary crossover. And I know I'm kind of like drawing, this is not the best, and you can't really even see this, and it's not going to give me anything. But because I noticed that we had an extended pullback here, we've kind of moved off of that 20-period moving average, and then the 60-minute chart, was oversold too. So what we did have here was this multiple time frame, and that's going to be the next video on the where you're able to measure out each individual time frame. So that 60-minute, we know we came back and we're almost a double bounce there. We're starting to turn back up. So we know that the daily is set up. So the daily on 10-4 is set up. So we go to the 60-minute chart, and you can see at the beginning of the day, we're really embedded down here. All right, so we're definitely oversold on the 60-minute chart. Then the 15-minute chart, boom, same exact thing. We're embedded on that. So going out of yesterday, entering today, we had multiple time frames. When you get the 60, 15, and daily all lined up, then it's basically just breaking it down to the 5-minute if you want to try to get that really exact entry. And that 5-minute sometimes gives you that, definitely gives you that that setup, but it doesn't, it's a much faster setup, and you're not going to, you're going to be whipsawed around a little bit more in that 5-minute. But the 5-minute was set up. It wasn't overbought. And that's one thing we didn't want to see, is just a, overbought 5. But as you can see, this thing ripped up on CMI. And another great example of that, and I got to do my next video on that, and Verifone will be that example. We've been watching Verifone in a wedge pattern, also giving us that double bounce. This looks so good, man. I banged the table hard today on this, and yesterday I called the pop in this because this is a great example of a multiple time frame. So yesterday we start off in the morning. It's not doing much. It's actually showing relative weakness. So I do a little more investigating, and I'm saying, oh, wait a second, let me just see this. And I looked at the 60, and I said, oh, the 60 just pulled back down, and this is a pretty decent pullback here, because we just from my experience dealing with stochastics and stuff, when you do see that downward channel stochastics and really stays embedded, then you really can't get a read. You could easily get an easy drop out here. But we tried to make a little rally here, and then we pulled back. And whenever you kind of pull out of a rally, it's almost considered a rotation to me. And that first time we come back down is always a buy trigger for myself. So remember, whenever we have an embedded stochastics, usually we get that, once you break out, you move up into an overbought level, and then you come back down. And that first retracement, first rotation, that 180 rotation is a buy signal for me. In this case, we kind of broke out, but then we came back down, and I was treating it that way, saying, oh, this is a rotation, we're going to get a bounce here. And then we looked at the daily. The daily was set up. We already know that's giving us that double bottom bounce. Then the 15-minute chart, and remember, this is all starting back here. I marked this out right on the 15. I looked at it. I said right here, I was actually writing on it. I said, yeah, this is considered oversold. And we have a coiled 15-minute chart, which we don't talk about the 15-minute being coiled, but it's still, the coil stochastic still means that there's a potential big explosive move out of here. And then we broke it down to the 5-minute chart, and I think at that point I realized, hey, we're about to go, and we started taking off, and that just carried through into today. So we had a little reversal candle, we had follow through today, and tomorrow the volume, the crossover, everything looks great. The downward wedge typically breaks to the upside. I think great setup. So that's a little update for you, and I just wanted to touch base. We had a great week. I want to shout out to all the members out there who've make the show what it is and put in the extra time and stuff. There's somebody out there that I feel like that's it. I'm going to get this video out, and I want to get home, because tomorrow is Friday and I need to be here early. Take care.